down 953 points in a single day. Are all of us facing a perfect storm in the markets? Hello everyone, welcome back to AI Market News. Today we're breaking down a market that is suddenly reeling. Based on available data, three massive thematic shocks have converged all at once, and it's sending shockwaves through global equities, currencies, and specifically catching our attention on the Japanese markets. Let's dive right into exactly what's happening. Shock 1. Inflation and geopolitics. According to current market information released Wednesday morning in Eastern Time, the U.S. inflation picture is getting a bit complicated. Core inflation actually came in softer than expected, which normally is a great sign. However, headline inflation accelerated to 4.2% year over year. That's the highest level we've seen since April of 2023. The underlying mechanism here is energy. A massive 7% surge in gasoline prices completely offset the cooling we saw in other sectors of the economy. And as you can see in the chart, crude oil remains highly elevated. Overnight, signals of additional U.S. military strikes against Iran drove these energy prices even higher. This creates a severe headache for the Federal Reserve. We know they're trying to get inflation back down to that 2% target, but right now, they're fighting against rising raw commodity costs. This sudden geopolitical escalation severely damaged what we call risk appetite in the markets. The mechanism here is that when sudden military conflicts or geopolitical risks spike, investors immediately get nervous. They sell off riskier assets, like stocks, to seek safety in cash or bonds, and that rush for the exit drives broader market prices down rapidly. That panic brings us right back to our opening number. The graph shows the Dow Jones taking a brutal hit, completely breaking below that psychological 50,000 level and closing down 953 points. We essentially saw risk appetite just collapse over the course of the trading session. Moving on to shock 2, BOJ leadership uncertainty. In a truly historic development, BOJ Governor Ueda was hospitalized on June 9th and will actually miss the scheduled policy meeting. To put that in perspective, this is the first time a sitting BOJ governor has missed a scheduled meeting since the current framework was established back in 1998. Deputy Governor Ryozo Himino will step in to chair the meeting in his absence. Now, the delicate balance of central bank communication is absolutely vital right now. Simply put, a dovish stance suggests keeping interest rates lower to stimulate the economy, while a hawkish stance favors raising rates to fight inflation. Markets had been meticulously calibrated to Governor Ueda's precise phrasing. Having a new communicator in the seat introduces immediate uncertainty about whether the forward guidance will sound as hawkish as all of us expected. The graph shows the USD/JPY daily chart under immense pressure right around that 160.5 level. If Deputy Governor Himino sounds even slightly dovish during his communications, we could see the yen sell off sharply. This would push the dollar-yen pair back toward the 161 range, creating a very real acute risk of currency intervention from Japanese authorities. And as you can see in the chart, this leadership uncertainty is driving significant local volatility in the Nikkei. The base case remains that rate normalization to 1.0% is ongoing, but the lack of the primary architect in the room is making investors incredibly nervous at the moment. That brings us to shock 3, tax sector correction. As you can see in the chart, the tech-heavy Nasdaq took a heavy blow, falling nearly 2%. And it's not just the broad index either. The SOX semiconductor index plummeted 3.4% on Wednesday and is now down over 12% from its recent highs. That officially places the chip sector into correction territory. So the crucial point is why exactly this is happening. The AI boom is incredibly bullish for long-term growth, for sure, but it requires astronomical amounts of cash today. We are seeing massive capital raises across the board. A $7 billion equity raise from SMCI, an $84.75 billion debt package from Alphabet, and a colossal $75 billion IPO from SpaceX. All of this creates a phenomenon known as a supply overhang. The underlying mechanism here is simple. When companies issue massive amounts of new stock or debt, they absorb the available cash currently circulating in the market. This simply leaves less capital available to support the prices of existing shares, particularly when interest rates are high and cash is expensive. The recent Oracle earnings report brilliantly illustrates this current dilemma.
Oracle reported a massive Q4 revenue beat at $19.2 billion. Under normal circumstances, that stock would soar, but instead it fell over 7% after hours. Why? Well, because they also announced a $50 billion capital raise to fund infrastructure. The mechanism here is that in a high-rate environment, the market ruthlessly punishes heavy capital expenditure because borrowing that money acts as a near-term headwind on a company's earnings.
Let's look at the economic week ahead. For Thursday, we have several major data points dropping in Eastern Time. We're closely watching the U.S. May Producer Price Index, or PPI, right alongside weekly jobless claims. If the PPI surprises higher, it will signal even more pressure on the Federal Reserve to hold rates high. We will also see the final pricing for that massive SpaceX IPO, which will dictate just how much liquidity is absorbed from the market. Then on Friday, we face a convergence of crucial catalysts. SpaceX will officially debut on the Nasdaq. Over in Japan, we have the highly anticipated BOJ rate decision, which is now happening without Governor Ueda voting. Furthermore, Friday marks the Japan SQ, or Special Quotation Settlement. That event is practically guaranteed to drive intense futures-led volatility in the Nikkei. So the structural question for all of us heading into the weekend is this: will the market find a reason to stabilize? Between geopolitical fears, central bank uncertainty, and tech sector capital drains, the next 48 hours will be absolutely critical to watch. Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by Notebook LM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.